Hello everybody, welcome to the TraderMerlin Show for your February 14th edition. Happy Valentine's Day to all the lovers out there. I guess what do they call this? National Breakup Day, I think is what Valentine's Day is. But happy Valentine's Day, everybody. Hope you're doing something fun and romantic this evening, even if you're just at home by yourself. And what a treat, I guess it is Valentine's Day, because we've got Brendan joining us. He hasn't been here for quite some time. Good to see you, Brendan. He's still got his bullish mindset out there, he says. Sorry for all of you who didn't buy the dip. We're going higher long term. That is a fact. We are going to go higher long term. It's just, what's your definition of long term? Is long term talking 10 years? Yeah, we'll probably be going higher ultimately in 10 years. What about the next 6 months, 8 months, a year? I don't know. That is to be determined. But yes, of course, over the long haul, our markets do go up. All right. As I mentioned on this program many times, I'm going to start doing a little bit of favoritism and giving question treatment to those that post comments underneath the YouTube video as opposed to those who email me. If you email me at TraderMerlin@gmail.com, I will still answer your questions, but it may not be on the next show because I have just so much time in each show as we go through it. So let's start off with the topic du jour, this bad boy right here, markets and war. Today was a very interesting day from just a jiggy, choppy, wild action intraday. I'll show you starting things off with the S&P because, as you guys know, I am still short the S&P, and I was glued to this one because the moves were just so wild today, intraday and before market open. Nice wild swings. A lot of this is just uncertainty of ongoing tensions between Russia, the Ukraine, and of course now the U.S. is involved, and you have the UK getting involved. So it's this global escalation of whatever happens over there. And we had this conversation as a group the other day, how do markets perform in periods of time when there's conflict or wars? Generally, as I mentioned, there is a knee-jerk reaction right away to the downside, and that'll last for 2, maybe 3 days, and then the markets will probably start to rally. So, as Brendan says, markets are going to go up in the long term. Well, I would disagree with that for just right now, because I think you'll probably see some increased volatility, people going to a risk-off type of mode given the uncertainty of global events. And then once we get some decision, either, hey, we'll have a peaceful resolution, which I think is what everybody wants, or you could have hostile tensions and loss of lives and bombing and all kinds of stuff. Then, that's not what everybody wants, but the markets will probably react favorably to that after a certain period of time. But now we just finally have conclusion as to what's going on. So today's trading activity, I'll start from the top. If you think of Russia, we think of oil. Well, the crude oil chart continuing to move up, 1.92% upside move today. Here's your daily, and the song remains the same, right? We have these little levels here right at 88.25 as a buy point for crude oil. It's bounced off that and now ripping. My guess is you'll probably see 100 here very soon, especially if we see increased conflict, increased tension going on over there with Russia. So that is your number one performer. Gold and commodities also. You got your risk off mode. We're going into some safer assets, which means gold finally breaking through the other day and now continuing that move to the upside right into this little yellow box we saw it hit on Friday's session, and now we tapped into it again on the gold futures. That's right around 1880 is the top end of that zone. My guess is you'll probably see it continue higher. Now we also had, which I normally don't look at here, but look at GLD just so we can see the ETFs for these things. There you have it coming into that peak on GLD that goes back into November and was also the origin of this nice big gap here in 2021 in June. Then you look at SLV. Right, SLV also moving up, but not to those highs we saw back in November. So a little bit weaker performance from silver as they stand right now, which is fine. Which is fine. But Brendan is actually talking negative on gold. Come on. You're always bullish on gold. You're like John O'Donnell. He always wants some gold, long jaw. Yes, and I agree, Brendan. It is just jawboning. However, it's creating global tension, and that makes things more volatile and uncertain. So with uncertainty, we get this weird choppy action in the equity markets, which brings me to your top 3, or at least number 3 on the list, which is the NASDAQ. And you can see this is a typical sign of fear and uncertainty. Not necessarily fear, but just uncertainty, which is the markets did almost nothing today for the NASDAQ. We opened and closed at pretty much the same price for the NASDAQ 100, but you can see the range was a pretty wide range today. Same thing going on for the S&P 500, which showed a little bit more of a down day, but still wide range, not a lot of clear direction there. And then, of course, the Russell, which started off a bit stronger, but ended with a red candle, a bit weaker here. I did not add anything to the S&P or NASDAQ or Russell shorts that I have on. I just decided to keep that position where it's at right now. And then surprisingly, your worst performer out of the top 4 indexes was Dow Jones Industrial Average down 0.48% today, and you can see it's its third day in a row. Although the declines have slowed down a little bit, it still is pretty ugly, and my guess is you will probably start challenging these lows right around 34,000 on the Dow futures contract. Now, last one, Bitcoin. Not much to speak of here, right? I'm still really just waiting for a close above 45,000. Until we get that close above 45,000, to me, the downtrend would still be intact on Bitcoin, so I need some... Give me some bump here. You know, there are some factors, which we'll talk about in the CIL tonight, that really kind of point to a much higher move for Bitcoin, probably to the $55,000, maybe $56,000 range, based off of exchange holdings of Bitcoin. So that will be a big piece of our discussion on Tuesday night's class. And that's your top 7 or 8 markets out there. I saw a comment come through here that says, why is energy down today? Well, it depends on which part of energy. Crude oil is obviously up. If you look at something like XLE, right, you have that down because I believe it's the anticipation of it impacting the companies themselves, right? The price of the commodity is going to be going up. But if all of a sudden we start to have issues with oil, maybe supply issues, then those oil companies won't make as much money. That's part of the reason why. And there we go. You knew I was going to get some Russian spam trying to sell their porn on the show. It seems like it happens every day. And there goes Asher. Goodbye. Later, dude. So I'll run through a couple listener questions here that came from the bottom of the YouTube feed. And there were quite a few of them. Oh, and by the way, I guess I do owe congratulations to the Los Angeles Rams on it was a pretty decent game. It wasn't horrible like I was expecting it to be. I do think that there was some bad calls in the game, but hey, all in all, the Rams won the game, so congrats to the Rams, and congrats to the quarterback there. All right, let's see. Can you teach us how to trade weekly or daily setups? Well, I can't. I'm not in the business on this show, Nayama, of teaching. I am teaching. I'm educating kind of about macro pieces, but I will not be going into, here's how you draw demand zones, supply zones, all the little intricate details of when you're supposed to buy, sell, all that issue. No, that's for Online Trading Academy or whatever school you decide to go to. So you'll have to go seek that information elsewhere. But, if you watch the show, you'll see kind of the methodology, the broad methodology, and then if you want the little details, you can go take a class there. Merlin, talk about putting stops. This is from Lori. Lori says, Merlin, you talk about putting stops on your stocks in case the markets turn. Would you do the same with preferred dividend stocks and CEFs that you keep for interest and dividends and don't trade? That's a great question, and I think that really lines up with what I do a lot with crypto, right? If you, Drew, we're always fighting the wrong war. Oh, never mind. I thought you were talking about this Ukraine thing. It's like, if you look at what I'm doing with some of my crypto pieces, for most of them, the yield I'm earning is far greater than I'm going to get on any stock that's out there. So let's just use an example here. So we'll go and I'll just bring up Yahoo so we can go to Yahoo, go to finance. That was my junk mail account, by the way. You guys can feel free to send email there. It's going to go right into a spam filter. So let's go to something like, anybody got a dividend-paying stock you want me to check out? If you got any dividend companies you want me to check out, let's look at General Electric just for giggles here. So here is your yield, 0.33%. Okay, so if you're looking at a 0.33% dividend yield for GE, that's a waste of time, right? It's dangerous to hold a security like that, thinking, I have this small amount of yield. Now there are, of course, a bunch of different ones. I don't do. Okay, we got USA, Liberty All-Star Equity Fund. I need to know more about Liberty All-Star Equity Fund. Let me just look at a profile here. I've never heard of this one actually. So what do we got? Liberty All-Star Fund, profile, financial services. It's closed-end mutual fund. Okay. So you got a closed-end fund. In this case, you're getting 10%, which is very high. Most equities aren't going to give you 10%. Oh, gosh, I got a whole bunch in here. But look, let's see. We got 10% on USA. You got AT&T. AT&T paying 8.62%. What else? ENB, Enbridge. Enbridge paying 6.18. Great. Verizon, VZ. And Verizon giving us 4.8%. Okay, and you got Philip Morris, formerly known as Philip Morris. We have Altria because they're too embarrassed to keep their name because it ties them to bad stuff. 7.15%. Okay, so with this, it's a question of, is that yield amount worth it for you for the long term, and do you really feel comfortable with these companies for the long haul? And I'm glad you asked that question, because if you look at, if I buy AT&T, right, and I make that 7%, I need to, of course, go and look at these price charts, because I'm not just buying AT&T expecting to get that yield. And I think we said 7%. Let me just real quickly make sure. There's Verizon. AT&T was how much? AT&T 8.62, right? So if you have 8.62%, but let's look at the price chart. What is the daily of AT&T telling me? AT&T's daily, actually start even off with the weekly, this tells me that it's going down, right? There is no clear direction or anything that tells me this thing is going up. So I have to have the confidence that this is going to stay the same price or drop no more than 8%. Otherwise, it's just a waste of money for me. So let's just see what 8% is from here. 8% is roughly the lows we saw just a couple of days ago. So, a couple weeks ago. So for this analysis, I would say no. I would not want to hold AT&T to get that 8% dividend. Even though it sounds great, you're making 8%, I could lose 8% very quickly on this thing because it's just going down, right? I'm waiting for T to get below $20. Well, you might see it get there. I mean, the trend is your friend to the bend at the end, and $20, like call it 19, right around $20 is kind of a significant low for AT&T, right? That's what we established back in 2002. Look, if you're approaching lows that you had 20 years ago, that's not a good sign of the company, right? Now let's go to one more, just for examples here. I want to run through a couple different ones that you guys have mentioned. So there's Enbridge, ENB. This is paying me 6.18%, all right? So I go to ENB. Enbridge, on the other hand, I would actually feel okay with this. Why? Because you are seeing an uptrend on the weekly time frame. Yes, we're coming into relatively all-time highs, at least for the past few years, but the trend is up. So at least I'm putting myself on the right side of the trade, right? That's this one definitely looks much better. Now, what was another one? I'll go one more just for fun. That was Enbridge. Let's see. We have Verizon, VZ, paying 4.8%. All right, let's look at Verizon's chart. Again, drifting down. So AT&T and Verizon, I'd be dumping them. I wouldn't want to be thinking about getting that little bit of yield, all right? I'm not stepping. I saw that email to Brendan. Thank you for that one. That was an interesting. I'm researching that one. It sounds really interesting. I don't walk that much to make any money with those shoes. Oh, there you go. And AT&T announced a dividend cut plus a stock spinoff. The difference is this, Lori. So for equities, especially when you're talking mature names, Enbridge, AT&T, Verizon, things like that, it's critical what the chart is doing because that tells me the trends. Short-term, long-term, intermediate, whatever that time frame we're looking at, that tells me the trends. And if I'm collecting dividends, I'm definitely got to be thinking months out, possibly years on this trade. With crypto, I have a completely different mindset because what I'm looking at in crypto are companies that are in their infancy and have barely even started to become noticed by the world. So I feel like I have a much greater long-term upside potential. So as Brendan says, I do a ton of staking. Oh, there's some more Russian spam. Just go take over the peninsula already. Jeez. Hide user. So I would much rather, in the equity side of things, if I am doing dividends plays, and I'll be honest, I don't do dividends plays in equities. I generally am trading actively, even if it's just for swing, maybe a couple positions. I don't ever think about dividends. I don't think I'm going to be in companies that long to get that type of dividend. But if I'm looking at something like, Polkadot, where I could be earning 13 or 14% per year on it, yeah, it is important for me, and I want to think, what is the future for this project? If the future looks good for the next couple of years, which I will probably be in that one, then I'm okay holding that. But with equities, I have to be much more careful because they're already matured. Most of these companies are, big names. That's why they're paying dividends. In my experience, and I think this is an economics thing, if you're a growth stock and you're making great money and your chart is just going up and going up and you have great prospects, you don't pay a dividend. Why do you need to reward your shareholders with dividends? When a company starts to pay dividends, it's more a sign of they see that business model slowing down. Therefore, they're returning some money back to people as incentive for you to hold the shares. So it's almost like, hey, hold our shares, we'll pay you. This is what a lot of the crypto are doing just to get noticed in the industry. So for example, you could go to some of these swap sites like Uniswap or SushiSwap or PancakeSwap or SundaySwap, and you can be a liquidity provider and earning those tokens. They're giving you free tokens essentially to help be a part and grow their network. With something like AT&T or Verizon, they're not so concerned with you holding the stock to grow their network. The growth potential doesn't seem like it's there, and those price charts don't really reflect that either. Let's see, what do I have here? There was one question came in. Iron Addict, what does IEP pay? Well, let's check that one out. And again, I'm not saying that this is the only things that we look for. It's just a piece of it. And knowing that they're very different industries, saying let's look at different equity markets versus cryptocurrencies and digital assets. So what do they pay? They're paying 14.67%. Again, if they're paying a dividend of 14.67%, I mean that's a pretty tasty yield there for an equity. So let's look at IEP. Well, if you look at it over the past 2 years, the stock has gone pretty much nowhere, right? It's just basically been chopping sideways. So granted, you did make 12%, but you didn't make any growth on the underlier. Now, for myself, and I'm sure this is the same for Big Eb, I know it's for Brendan as well, if I'm holding Solana, as Brendan's talking about, or Avalanche, or Polkadot, or Ethereum, I'm looking at it from the perspective of I've got a growth stock. It's not going to go sideways for 2 years. I'm looking at big growth potential down the road. Plus, I can now take that, park it, and make 10, 12, 15%. Then all of a sudden, I am much more attracted to those types of investments. I mean, heck, you can even, part of our discussion for tomorrow night in the Crypto Investor Live program is how to take cash and get up to 20% rates of return on it, which is insane to think. Now, I'm doing a whole bunch of spreadsheets and math for my session for tomorrow night. And if you look at my bank account, one of my accounts is paying 0.01% interest. So let's say you got $50,000, I get 0.01% interest. I mean, you're making almost nothing on your investments. So 50,000 times 0.01, it's 0.001. I make $50 a year in interest on a $50,000 account. That's $50 in interest on a $50,000 account. Yet I can move it through some digital assets, put it into a cash equivalent, and be making 20%, which would be $10,000 in interest. $10,000 per year in interest, or $50 in interest for holding dollars. Same thing, one's just digital. So these are, obviously for me, one of the major decisions I have to be making in my allocation of capital is how much of that $50,000 do I want to put in the equity markets? Well, since I'm uncertain on the equity markets and I see much more tension and problems ahead, I'd rather go in like a cash equivalent, go to a stable coin or something like that and park it in a location that's going to get me a rate of return. Because this will all hopefully happen to everybody here. At some point in your trading life, you're going to go through a big market downturn. And for anybody who's been trading 13 years or less, you really haven't had a market downturn, not a long one. So if we get a downturn that's like, let's say a 50% drawdown in the market, and you've had your money sitting in a 20% interest earning account, it's nothing but smiles. I mean, that's a 70% difference. That's huge, big time. When you talk GameFi, are you talking about a specific company, or are you just talking about the whole gamification, Brendan? Because we did a bunch of stuff with the metaverse and the gaming stocks, and there's a whole gaming stocks as well as the different cryptocurrencies in that space. There's a ton of them. It's actually a very exciting industry to be in. So, Lori, and you're here with me, so let's see what your follow-up. Correct. Yes. So Lori says CEF and dividend stocks are part of the strategic investor curriculum. Yes, it's a way to, because when you get dividends, you're getting a somewhat predictable income stream. Now, what we haven't done in the strategic investor, just because it's so nascent and new, I think what you're going to see is digital assets and cryptocurrencies incorporating themselves in a strategic investor. The reason they're not in there now is because in the strategic investor program, you're looking at things that are protected under SIPC insurance or FDIC. If you have a lot of crypto in there, they're not regulated yet, but we will see that regulation. I'm pretty sure it's going to happen this year. And if we do get FDIC or SIPC insurance on these assets, we'll start putting those into the strategic investor. If you've got cash and you're getting 20% on it, that's beating most equity market index returns over the course of a year. But we have to take it step by step, right? The key to strategic investor, and just any course that Online Trading Academy teaches, it's paramount that risk management is there. And when you look at strategic investor, it's normally retirement accounts, 401ks, long-term investment planning, right? You really got to be careful when you're dealing with real volatile stuff like crypto in those types of accounts. So there's a conservative approach towards that strategic investor, which of course we can modify to suit our own needs, but the general approach needs to be more conservative there because we need to protect those assets. What's the catch, Merlin? If crypto is dropping, how are they paying out that interest? They're lending it out. So most of it's lending protocols. It's also being rewarded with tokens that have been pre-mined. So a lot of what they'll do, I'll give you an example. Let me see. I create the TraderMerlin coin, right? And I make 100 million of those. And I take 75 million and I put them in a pool and I say, this is for rewards for the viewers, right? So maybe every comment you guys make, I give you one TraderMerlin token. Just to encourage people to, I'm just making up an example here, but you guys see the utility of it. So now if you comment, okay, you get a TraderMerlin token. And then, so I've taken 75 million out for that. I sell 25 million to the public at whatever amount we decide. And then now what I'm going to do is I'm going to be encouraging everyone to utilize my platform. Come to TraderMerlin, and now you engage, I'll give you more TraderMerlin tokens, and maybe there's some other utility for the token. But that's what a lot of them do, is they pre-mine all these tokens, and they keep a huge basket. So for example, there's a couple of swap sites that I use, and let's say you use something like, Sushi Swap. You can stake your tokens there or add to liquidity pools, and they'll pay you in the Sushi Swap token. So they're using their token, which to them is free, as a reward for you to utilize that network. That's part of the way you get these compounding great rates of return. I wish, Margaret, in Miami, the Bitcoin conference, I wish. Unfortunately, that's going to be a negative for me. Merlin Phi. Every coin other Bitcoin has associated risk orders of magnitude higher than Bitcoin. Agreed. Yep. I mean, Bitcoin, you might not get your 100x moves in Bitcoin, but you will have that store of value over time, just growing and growing. Bitcoin's it. I mean, still the biggest portion of my portfolio. Chase says, I have to imagine the yield searching in this type of inflationary environment will only continue. Makes me wonder how big the overall DeFi market can grow. I think it can get really, really big. I think the DeFi market can get absolutely massive. But remember, the more we go to decentralized finance, and for those who are just right now shaking your head going, I don't want to listen to this crap, I'm tired of crypto, hear me out on this example. We have right now centralized exchanges, which is, your CME, your New York Stock Exchange, your E-Trade, Ameritrade, Schwab, Thinkorswim, Interactive Brokers. Those are all centralized. And at any moment, for any reason whatsoever, you can be separated from your funds permanently. You could come into some issue where all of a sudden your brokerage account says, oh, well, we denied you access. And you're like, why? Now you have to go through all this process. The government can go in and seize those assets. The government can go to E-Trade and say, freeze all his accounts. Anything to deal with that guy's accounts, freeze them. That's the danger of centralized. So we all, and I'm speaking for every single person here, there is no exception. Every single one of us is dealing in some way, shape, or form with a centralized marketplace. There are no exceptions in this group right now. Now, if we have a system where I no longer have to give them my social security card information, my address, my personal information, I don't have anybody tracking, monitoring, or influencing in any way, shape, my trades, nor can they say, we're cutting that guy off, that adds tremendous value to the average consumer. That gives huge value to me and to you if you think of it on the big picture here. So decentralized marketplaces, I believe, are going to grow significantly. But remember, they are a physical threat. They are a fundamental threat to everything that we currently know and utilize. Amazon, centralized. eBay, centralized. Dell Computers, centralized. Microsoft, centralized. Your Department of Motor Vehicles, centralized. All of this is centralized. So anything that's centralized is threatened by DeFi. So there's going to be a digital war here with Web 3.0 and with the creation, development, and utilization of these markets and assets. It's going to get very interesting going forward, but I think it's an unstoppable machine at this point that says there's going to always be people like me and like Brendan and I think Big Eb here who are going to go, I would rather have my anonymity. I want to control my own money. I don't want anybody to ever be able to grab my assets and say, You no longer have those, they're ours. I agree, Brendan. Can't stop crypto. Are you short any crypto? It has a lot of movement, so good to trade. I haven't. I mean, I have shorted in the past, but I'm not short right now. No, I'm actually buying. I bought some more today. I bought some more crypto today. What did I buy? I bought some Matic and I bought some Cosmos today. Well, you can modify code and tweak it, but when it's blockchain, you have that immutable record of it. All right, let me go back to some viewer questions here. I'm going to go way over time today, and I want to make sure I get to some of the questions that came through. So there were so many comments; it was awesome. Glenn says, with my 401k, I'm in cash right now, loving it, but the trader in me wants to buy something. LOL. What are some good short stocks to get into for a couple of days or more? Great question. I don't know if I would recommend a specific stock. Now, I'm always looking at the market saying, hey, what opportunities do I see on price charts? And I would say if you want to go short on things, be careful of individual securities. What I would do is, you guys see on the right-hand side, I've got the sector ETFs, and I would just kind of scroll through them and say, which of these look weak? So here you can see you've got consumer discretionaries. Here's technology. I mean, it's looking weaker, but I don't see any great short point here. Industrials actually looks more like a buy point. You got materials. None of these look great from a short perspective right now. Utilities, keep your eye on utilities. You guys see at this 101.50 mark, we have not had a close below that since May of 2021. If we get a close below 101.50 on utility, IYR, this is actually real estate, excuse me, you could see this thing break and start to head lower. So there'd be something that I would look to short as a basket, but not an individual security. Here's healthcare. Healthcare is a similar boat. One of the things that I've been looking for is a lower high and a lower low in the equity markets. We have a lower high right now, but we don't have a lower low yet. Well, you notice that healthcare here is showing the same basic picture of weakness in the overall market. So, this might be one potentially going forward to look for going short on. Financials still look strong. And then you have energy, which don't even think about shorting energy right now. That's a runaway freight train. You'll hurt yourself doing that. So I would definitely say go with something in the ETF category, right? Maybe you go out and look at some of the broader indexes, the Nasdaq, S&P, Russell, if you're thinking about going short for a few days. If you really want to add firepower to it, then you can add on something like leverage. So you have here is QID, right? So this is a double short Nasdaq. You have SH. This is just a simple inverse S&P. You have here's SQQQ. This is triple short the Nasdaq. So if you're going for a couple days, you can add firepower to your trade by using these leverage assets. But just remember, don't carry them for a long period of time. So when the dollar goes up at the 10-year goes down, would that be bullish? That's from Naum. Naum says when the dollar goes up at the 10-year goes down, would that be bullish? I'm not quite sure. So let's first off start by looking at the dollar index because it's now starting to move. Remember, we've been talking about my overt bullishness on the U.S. dollar because of increasing yields in the U.S. So the dollar index was up 0.27% today. Dollar's moving up great. You'll probably see it challenge this 97.25 mark here in the next couple weeks. But you look at the yields. Let's go down to the yields here. Here's the 10-year. We had some great volatility in that 10-year, but still, kind of beating its head against this 2% mark. I was actually pretty happy a few days ago when we had a close above 2%. But, when you see this yield rise, most likely you'll see the dollar rise as well, right? There's a positive relationship there because the higher the yield is, the more people will want to hold dollars. It's called the carry trade. So they'll be holding U.S. dollars and hopefully getting more yield for their money. Let's see, what else do I have? Copper took a nosedive last week. Let's see, do I have copper on here? HG. All right. Took a nosedive, but, look at the price chart here. It's pretty much done what? It looks like the Russell 2000 again. I mean, copper, I know I'm cutting off these tails down here, but for the most part, you've kind of been stuck in that big range on copper. So while it took a nosedive, it's still right dead center of the range. You got some spread trades on futures? Bring it on. What else do I have? I'm going to all the YouTube questions first. Alan says, it appears crypto is still behaving like a risk-on asset more than an inflation hedge. Correct. I agree. Oh, boy. You got a long-winded question here. Let me Let me try to read this one off for you. He says, when you say this could be the beginning of the end, well, the end of just this monster perpetual bull run we've been on. Are you referring to the long-term debt cycle? No. I think that we're addicted to debt right now, so I don't think the debt cycle will change until there's a default. Just keep on adding to debt. We are addicted to it. Let's see. Or are you thinking more short-term, like late 2018 scenario, global debt to GDP has been greater than 100%? Yep. And economists have been calling for it to end just like they do every year. Yes, because of 20%. So why would this time be different? This time would be different, in my opinion, just because of the structure. So, yes, we'll go to a monthly and go look at, say, the S&P 500. You know, we could certainly look at debt, but here's your NASDAQ as well. And, you know, this is the NASDAQ crash back here, which goes down in history. It's literally written about in textbooks right now as the dot-com crash. I mean, this was massive at the time. Now you look at what's going on now. This is completely different. All right, this is way out of line. This is an aberration. I mean, even go logarithmic just to make Tom happy here today. It's still one of the craziest moves you've ever seen in financial markets. And at some point, it'll correct. They always do. Whether you're looking at that, you look at the S&P 500, right? You know, these two yellow boxes were two of the biggest financial sell-offs in the history of the S&P. The dot-com bubble, and then, of course, the financial crisis or housing crisis, and here we are now. You know, if my forecast comes true, which means we will target 36.27 on the S&P, that's still nothing. That's nothing on the grand scheme of things for a pullback. If you look at those previous yellow boxes, one of them was, the first one on the left was 50%, and the one on the right was 57%. So how far would 50% be? Well, obviously we can look at the numbers, but if you go off the peak, 50% would take us down to roughly 2,400. That still wouldn't be that big of a deal. That would be just a pullback, in my opinion. So, you know, this time's different because we've been continually fueling this market, continually fueling the debt and pumping more and more in. Again, when you look at the last 70 years, actually, let me rephrase that. You look at the last 72 years, we've increased our money supply to the tune of roughly $17 trillion. 15 of that came in the last 2 years. That is an absolute, I mean, that's literally like somebody saying, hey, I need a morphine injection for the pain, and they wheel in a 50-gallon vat of morphine and say, buckle up, you're taking it all. I mean, that's pretty much what they've done to the money supply and to the economy, and the charts have shown that result. I mean, you get a pretty impressive move. So this will end at some point, and it'll probably end with a, I don't know if it'd necessarily be a depression. I think it'll definitely be a stagflation type of environment where it's going to drift down for a while, probably a couple of years, and then it'll bounce back up and hit all-time highs yet again. No, Mimi, you shouldn't sell the S&P. I think what you should do is you should put a line in the sand for yourself and says, if Merlin is right, and I could very well be wrong. I have been wrong before, and I know how to deal with it when I'm wrong. You guys have to make that decision for yourself. So, Mimi, for me, it would be the situation of, you need to look at the price charts and say, where should I get out? Right? I've said this many times. People are sitting on so much paper profit. If you look at these lows from where we peaked out at just a couple months ago, the S&P is up 600%. So you've seen your 401k just balloon, and you're thinking, I'm rich. You're not rich. You're paper rich. So until you lock that in and convert it to cash, that's all at risk. So if all of a sudden we get a black swan event and this market dives 20% in a day and gets lock limited down, which probably won't happen, but if it does, your portfolio is eviscerated, 20% gone. So put a line in and say, hey, if it gets below here, I'll go to cash. Or, I'm showing the chart saying gets below here. That number is your number. What's your number where you say, hey, I'll get out? It's going to be different for everybody. It's going to be totally different. But I think this is what saves people from going through what I call the lost decade. Now, a lost decade is that period of time. It originally started with Japan because they had basically 10 years their economy did nothing. And then it was 20 years, and then it was 30 years. So their economy is just doing nothing. But for the U.S., if you look from 2000 to 2013, if you bought in 2000, you had to wait 13 years for your stocks to get back up to their value. That's 13 years of wasted time. But if I put a stop loss on my portfolio in 2000 and it dropped a certain amount, whatever, 5%, 10%, 20%, you name the number, if you get out, then you can avoid and sidestep that giant decline and buy back in at cheaper prices. You can now buy more of the same shares you had a year ago or 6 months ago. That's the point. That's why We're doing the fractional reserve banking over there, huh, Brendan? Let's see, what else do I have? There's so many good comments. That would make my... Oh, you're still in them? Yeah, I'm still in them as well. I'm keeping mine. Who is going to be left holding the bag? The retail investors, peasant. The peasant. Or the peasants. But the average person, right? The average American, and this is not just America, this is every country, but the average citizen is going to sit in their 401k and their IRAs and just hold on. I'll just keep dollar cost averaging because over the next 30 years it's going to go up. That's true. But most people, they just hold. We're going to keep holding on to it. And if the market does drop 50% or more, that means 50% of that portfolio disappears. Shouldn't have happened. If you lose 10 or 15%, okay, well, you can buy back in at a much lower price. Therefore, your overall compounded annual rate of return is going to be far superior than anybody who's just a buy and hold investor. Let's see what else. I got more questions. Look for question marks in here. Yep, you do. You got to play the game. You absolutely have to. Don't be nervous, Mimi. It's part of it, right? I mean, anybody who buys into the stock market, you have to understand there's going to be ups and there's going to be downs. Now, over the course of time, there will probably be far more ups than downs. But again, I keep showing this chart, which is basically all you have is ups. I mean, this has been nothing but up. A couple little tiny down moves, no big deal. So at some point, it's just a reversion to the mean. It's a normal market action to go back to its average. And here's your 200 period moving average, by the way. This is a 200-month moving average, just to put it into perspective. That's basically saying if we got down there, all my lines are going to be all wonky now. That's a 57% decline off the tops. Now, I don't know if we'll get there. I hope so because I'm short right now. But, here's your 200 period moving average on a weekly. Well, that means we would be dropping just a little bit more, which is where my next target is right around 34.63 on the S&P. All right, I think that's where we're headed. That's about a 20% decline. I get a rush when I hit the buy or sell button. Inflation at 7.5%. My interest at 5.3. Yeah, there you go. Oh boy, don't ask him how Trudeau is. I get all worked up. So let me just real quickly go just more quick. How much time do I got? Oh my goodness. So here is a question came in from Lee. He says, will natural gas benefit from the Russian assault? Well, we don't know whether Russia's going to, attack. Let's hope that they don't. Nobody wants to see people getting killed. But if they do, certainly, yes. You look at what's going on with crude oil. Large part of the reason we've seen this crude oil chart jump so aggressively, get the daily up here, has been because of the ongoing tensions with Russia. Now, it's funny because they're not like the only supplier of oil in the world, but it would create a potential disruption to the global supply inventory. And that's what's causing a nice spike up. And you look at the longer term picture here, unfortunately, this long blip from 2020 is just ruins everything. It really bugs me that we have that one. But let's see if I can go to a weekly. I'll adjust the chart here a little bit because the question now becomes, well, where are we going? Right? If we do continue on up, and again, I do believe we're going to hit $100 on oil. There you go. Where does it rush up to? And it really goes all the way back to these levels that go back into 2014, right? 106, 107 looks like the major stopping point for it. And if we get above that, you could really see it rip. I mean, it's pretty bad. And then you asked about natural gas. So let's look at natural gas futures, and I'll go to UNG because that's what more people are going to be trading. But here is natural gas. I mean, this thing's been all over the place, but given the conflict, given the tension, if it does happen, sure. Now, we still are in the midst of winter, which of course keeps the price of natural gas, or can keep the price of natural gas high. What I have not looked at here would be the inventory data to see how much are we already stockpiling and storing up. But if there is an oil shortage, then yes, there's a potential for natural gas to have more increased upside there. So Lee, I would say natural gas stands to benefit if there is a Russian assault. Let's see. Oh, okay. This is from Graham. Can you look at Moderna today? I bought it a couple months ago and with a sad face. So I don't trade drug stocks. Just everybody knows that. That's funny. We analyzed this a while back, and there's your little kind of symmetrical pennant formation, and it said stay out of it until it moves below it or above it, and you got the down move. That said, where do you think it's going to be going? Your obvious target for me starts right around 112.50. That's where I think you're headed on Moderna. You've got this break since August of 2021. It's been doing nothing but down. Lower lows, lower highs, classic definition of a downtrend. Granted, it's not a tremendous amount of time, but it has been trending down. So your bias should be, if you're trading in the shorter term, looking for shorting opportunities on Moderna. I know that's not what you want to hear, Graham. So if you are long, you should... Oh, thank you. Thanks, David. There you go. Chart coming. Yeah, Big Eb says vaccine stocks are pretty much over. I tend to agree. I think that the heyday for them has spiked and run its course. But there you go. Sorry about the no chart thing. But I'm not a big fan. And Graham, when you look at something like Moderna, you're thinking, hey, I got a great company. They're making the vaccines, yada yada yada. Whatever your story is, price chart tells me it's trending down. So that uptrend that we had there for the longest time, we can put whatever moving averages we want on here. This is we were joking around with the 26 the other day, but let's put something like a 50-period moving average on this bad boy, which would be a very different line, but it's still breaking down below it. I mean, it's rolled over. So whether you're using a 20, a 50, a 40, you are seeing a break on multiple levels. The trend is over. So now the party should be sell it. So you got to make sure that you have a stop loss in place on this bad boy, Graham, because it could go much lower. And there was one more question that had a whole bunch of cars in it. This is for Phil, and I promise, David, I will make sure you guys see the charts. Phil says, please look at Lucid, Neo, Rivian, and XPEV. So obviously you want some EV. I'll start things off with the daddy. Let's just take a look at Tesla. And I'm going to start on the daily, just because I like to look at the more recent data, get rid of these stupid moving averages, which we don't need. Tesla, for all the excitement around it, it just feels like it's falling flat over the past couple weeks. Really hasn't done much, right? Just kind of stalling at this 875 level. So I'm not that excited about Tesla's chart, even though I like the company overall. Let's look at Lucid. And now I think Lucid has earnings next week, so that would be part of the be careful with that play. You're coming back into the origin of this last huge move up, which was on the 22nd of October of 2021. There was that gap, and then that was the most recent ballistic move to the upside, where it went from $24 to $60 in just a couple of weeks. You're almost back there. So $24 might be a buy point, but if you got below, let's say 22, I think you got to get out, because there's unfilled gaps here on Lucid. To me, it's too dangerous to play going into earnings. It's just, you just don't know. I don't know enough, and I know we've got some people here that work in the auto industry, and they're still, kind of like, I don't know if I would touch that one. Just be careful with that one, Phil. Neo as well. This was a darling stock for a long time, got tons of attention, but what's the trend? Since January of 2021, it's been lower lows, lower highs, so for me, short the rallies. You get to 29, short it. Just doesn't, and again, you have to remove your emotion, your beliefs about the company and how you feel about them. The trend is what's important. That's what makes me money. If I'm going long something, there should be an uptrend to it that's going to, take my money and make more with it. If it's going down like this and you're trying to buy it, you're catching the proverbial falling knife. And while you might get lucky every now and again, the odds are this thing's going to keep trending. That's what trends do. So Neo, not a big fan. Rivian, liking the truck, seen a few of them around lately. This is a little more challenging because we just don't have that much historical data. We only have since November of last year. Right now, I would say do nothing. It's just hesitating. Feels like it's just stalling right here. Remember, Rivian's IPO price was $78, and now you're at $62.99. So it's already trading at a discount compared to what its IPO price was. All right. So not a big fan of this one, although I would keep an eye on it just because I'm seeing them roll around the streets here in Southern California. They look pretty cool, even with those stupid headlights. And let's see, what else we got? XPEV. Similar, right? I see tons of chop, but I don't see any clear direction. So I got to be honest, Phil, none of these right now look great. None of them look great as an investment opportunity for me. Unfortunately, you can take that for what it's worth, but unless it's got direction, I don't really want to mess with it. I want direction. Let's see what we got. What about Baba? Look, Baba's been. Here's the thing. Baba is supposed to report earnings the last 3 weeks. Now Alibaba off its highs of over 320 bucks. Now it's down at 121. So you're talking almost a 60% decline, or actually a little bit right around 60% decline. You would think that this is a great buying opportunity, but again, you just never know what is going on with China stuff. So you got to be careful there. Look at the sideways action that's had since December of last year, right? We've shot up to 139. We've been as low as, let's call it 110. So you've got a $29 range here. Just for Tom, we'll bust out the yellow box. There you go. There's the yellow box. Until you get a break out of that, I would say just leave that one alone. You know, their earnings is, I'm pretty sure they're next week, but they were supposed to be last Tuesday and then the Tuesday before that, and they're supposed to be tomorrow. I am with Brendan. Screw Chinese companies. You just don't know. I'm not saying they're bad companies. I just don't know. I don't know any of the I don't trust the data coming out of them. Let's see what else I see here. I just saw a Polestar on the road. I believe they're a Chinese Volvo. You know, they look really cool. They're actually out of Santa Monica. They really. I saw the car. It looked pretty awesome. I haven't seen them rolling down the streets, but I'd like to see more of those. Margaret says good downturn on Pfizer. Well, you know, again, it's the vaccine. It's basically that story is done. So yeah, you get your boosters, etc. But the big rush of, hey, you got to have 1, 2, 3, 4, 5 shots. Keep taking shots. Now it's like, all right, we'll get boosters every now and again. But yeah, these are probably going to give back a lot of profits in those areas. What else did I have? I did the Moderna. Here is economic calendar for today, or for tomorrow, just so I can get this one out of the way. Your economic calendar for the 15th of February. For the euro, you have the German ZEW economic sentiment report, and that is important. Obviously, you know what's been going on with the euro lately. We talked about this the other day. Nice double top forming on the euro, and has had great follow through. So hopefully, you guys got short that euro. Here's the euro chart. Remember, the dollar was coming into demand. The euro was coming into supply. Great, fine, trade that range. So seeing some pretty negative moves in the euro here over the past week. Well, that German ZEW economic sentiment report comes out tomorrow at 2 a.m., so that'll be factored in by the time we wake up. That's a pretty big report. You also have, for Canada, they have their housing starts number, and then a couple smaller ones here for the U.S. The PPI numbers come out on tomorrow, but really it's the core PCE price index that's happening next week. That's the real moneymaker, but they're expecting PPI numbers to jump. And now, I personally think that they've raised this bar just so it doesn't have as much of an impact. Like, oh, let's raise it. Well, they're expecting it to go from 0.2% to 0.5%. Remember, if producers are paying more to make the products that we buy, they're passing that on to us, which means more inflation. Yes. They're being optimistic here with the Empire State Manufacturing Index as well. You can see we had a contraction. That's the first contraction in quite some time for the Empire State Manufacturing Index. They're now expecting it to come out at 11.9, which would be obviously positive, but not great strength. And that's pretty much it for the economic data for tomorrow. We have TIC long-term purchases as well for the U.S. That's happening at 1 p.m. I think that's Pacific. I don't remember what the times I have. That's maybe 1 p.m. Eastern Standard Time. Or no, Pacific, 1 hour before the market. Here we go. All my numbers here are Pacific. Jeez Louise. I'm struggling today. All right. I think that's going to do it for me. What time I got? Oh, yeah. I did a long one today. Let's see. Soros, I think, just bought a lot of Rivian. Good. Rivian's got good backers. You know, I think that's one of the keys is they've got good backers. When you got good backers, you got good money in deep pockets. You know, you have the potential for your product to last a little bit longer or survive any market downturns is pretty damn good. Cool. Well, that's going to do it for me, everybody. Again, if you have comments, put them down below the video on YouTube. I'll get to all those first and foremost to start the show for tomorrow. I wasn't sure I was going to be able to do shows this week, but it looks like we'll be doing the whole show this week. Facebook, would you be, it's funny, someone asked me that. Rob L says, what would be your entry point if I was a buyer on Facebook? Not really a buyer of Facebook personally. Not liking the platform. I think that there's being like kind of an exodus towards it. And you have some gaps here that haven't filled yet. So I would say probably getting close to this 200 mark. You know, your 200 mark, definitely 201 to 200 would be the tiny little $1 zone that I'd potentially be thinking about buying Facebook in. But be careful with that one. It's broken unless they change a little bit of their image in society right now. I don't see them really soaring anymore. But the big gap scares me on Facebook. Yeah. And I think, and Margaret, a lot of people think that big gap is going to fill, which, you know, it could absolutely. All right, excellent, everybody. I'm going to wrap it up for today. Again, if you have comments, questions, feedback, you can put those down below the video on the YouTube channel. Those will get priority answering on tomorrow's show. If not, if you have something else you want to talk to me about, you can email me at TraderMerlin@gmail.com. Until then, happy trading, everybody, and I will see you all on tomorrow's show. Take care.